afternoon. Welcome to Midcap Radar. I am Sonal Bhutra and with me is Reema Tendulkar, and these are the top headlines that we are tracking for you. Midcaps fall harder than larger peers in a range-bound session. Stocks though recoup early losses. Realty and industrials lead the fall while energy shows resilience.
Sugar stocks rally on buzz that the government will consider raising the export quota for the current marketing year after assessing production in January. Dhampur Sugars, Bajaj Hindustan, Sri Renuka Sugars surged between 5 to 9%.
Deepak Fertilizers gains after it unveils a demerger plan for its mining, chemicals and fertilizer businesses. This restructuring is in line with its strategic shift from commodity to specialty solutions.
GMM Pfaudler gets drubbed after its overseas promoter initiates a sale of over a 30% stake worth 2,300 crore rupees.
Nawa gains after it tells CNBC-TV18 it expects to receive a net $227 million from Zambia Electricity Supply Corporation, while Hindustan Foods' decision to acquire Reckitt's Himachal unit gets a thumbs up. All right, those are the top headlines that we are tracking for you. Good afternoon. By the way, markets did see a substantial recovery from the lows and has slipped again. So right now, yes, those losses are not as exaggerated, but still it's a 50-point cut that we are seeing on the Nifty. Mid-cap side of things, they continue to underperform the benchmark. So that index is down 370 points. The Bank Nifty too is lower. It's down around 150 points. Now remember, Nifty did see some buying from the lows just a couple of minutes back and has sustained at those levels, and we do have a couple of these stocks which are at the day's low. So Dr. Reddy's, on the back of the news that the clinical trials for one of its drug has not continued because of the results that they got, which they did not expect. So that stock is lower by 2% odd. We also have Coal India, which is lower at the day's low. Coal Power Grid is the other one. Reema, a lot of central bank action globally, and that is something that is weighing on our own markets as well, especially on the mid-cap side of things.
Absolutely. The Midcap Index is underperforming today. The Midcap Index is down 1.1%. The advanced decline ratio has turned decisively in favor of the losing side. So we've got 2 stocks in the green for 3 in the red. And the big knock has come in on the PSU Banking Index, with the Nifty PSU Banking Index down close to about 2%. We'll talk more about the individual constituents and the losses there. But let's welcome Hemen Kapari of KR Choksi Securities now to get in a tech check on the markets. Hemen, we went down to levels sub 18,300. From there has been a fair amount of a pullback, nearly 100 points off from the day's low. Your thoughts on the index, and is there a trade?
A very good morning to you, Reema. Thank you for having me on the show. Yes, a trade, yes. So 18,350 was the previous bottom. We broke 18,300 and bounced back. Reema, the VIX still hasn't shot through the roof. Okay, we've come off significantly, but the VIX is still not at alarming levels. So that seems fine. Bank Nifty was propping up the market. That's walked on a corrective phase. IT and Reliance, which were the sort of architects of the move, walked into a corrective phase. So frankly speaking, this was on the anvil and it's happened. Having said that, I believe in the next few trading sessions, IT and Reliance would post a bottom, and that would sort of put a cap on the downside as far as the Nifty is concerned. In terms of stocks, 2 stock picks, Reema. Firstly, a buy call on Bajaj Finserv. It's a contra buy, deeply oversold. The daily mechanical indicators are slowly turning positive. So one can buy Bajaj Finserv at 1600, stop loss 1575, target 1650. Secondly, is a buy call on Zydus Life Sciences. We've been over here for almost 11 trading sessions. Decent support, has taken support on the 55-day exponential moving average. Looks set for a rebound from here. So one can buy Zydus Life at 410, stop loss 398, target 430.
Okay, and what would your individual technical picks? Okay, you have spoken about the individual technical picks as well. Hemen, thank you so much for joining us and taking us through your technical picks and market moves as well. With that, let's move on. It is our segment Midcaps Movers. We have Vivek to take us through the midcaps that are moving around in trade. Vivek?
Well, good afternoon. A day of underperformance as far as the broader end of the markets are concerned. But still, we have quite a couple of stocks on our radar that are doing well, and mainly this on the back of individual developments. So first we have Mahindra CIA. This particular stock continues its up move for the second straight session. Remember, yesterday the company said that it would be hiving off its German subsidiary, which was seen as a drag as far as its own operations were concerned. You alluded to the sugar sector. Ugo Sugar continues its up move today at a fresh 52-week high, and this particular stock, Salasa Tech, also at a fresh 52-week high. Sugar stocks, some of the ones you already mentioned, but today on very strong volumes, you're seeing most of the names surge higher. Dalmia Bharat Sugar, Uttam Sugar, DCM, Sriram, Bajaj Hindustan, all of these stocks are up significantly in today's trading session. Moving on to some of the stocks that are moving up on stronger volumes, you have a company called EPL, which is in the packaging space. You also have Railtel on the back of individual news flow, and Dodla Dairy today is up on very strong volumes. On the other hand, some of the stocks that we are tracking that are seeing big cuts in the session today. HG Infra, no specific news flow as such in today's trading session, but the stock is down on strong volumes. Polycab giving up its recent gains. It's been a strong outperformer in this particular week, but today down quite significantly. Dish TV as well as BHEL down on profit booking in today's trading session.
Okay, thank you very much for that. We'll slip into a very short break. On the other side, we'll invite the management of Sriram Properties to discuss their business outlook. The company has also acquired a plotted development project of the Golden Gates Group. It was a stressed asset with the lending entities a part of the IFL groups. For more details on this project, we'll be joined by the MD of Sriram Properties.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Sriram Properties, that is the stock on our radar, has been on an acquisition spree. Most recently, it acquired a 125 crore rupee worth project, Golden Era, in North Bengaluru. That is a Golden Gates Group property. Murli Malayappan, who is the MD at Sriram Properties, is joining us now to discuss this acquisition and the general business outlook as well. Mr. Murli, good afternoon. Thanks a lot for joining us. Well, this is the recent acquisition that you made. Before that, back in November also, you acquired a stake, or you bought a property as well. So is that going to be the strategy for the company, that you will buy projects and then develop them versus developing them from scratch?
It's both. As you see that because of the consolidation for large players like us, markets throwing lots of opportunities on the distressed assets. So we'll be very, very opportunistic. It is not only we should get distressed assets or only fresh land deals. We'll be very opportunistic in this. As the deal is if it is attractive, we will do it. Currently, as you've seen, two stress projects in Q3, we have done that, and quite a lot of projects in pipeline. There are a lot of opportunities at our doorstep now. We have been evaluating those opportunities also. Some of them will fructify if it meets our criteria of returns criteria. Otherwise, we'll just drop. On the other hand, the regular greenfield projects also we are looking at aggressively. As you know that we have set up this fund along with the ASK, about 500 crore capital available, out of which 125 crore we are committed for this acquisition with Golden Gate property. Remaining 370 is available now. So hopefully we should be able to consume that also in the next few months.
Afternoon. Can you talk a little bit about this Golden Gates Group, the plotted development project that you've acquired right now? We understand the aggregate saleable area is approximately 10 lakh square feet. What is the value of it? What is the total amount that you can realize? And if you could just give us the path to this realization.
So this is in Bangalore North. It's a most promising location today, and there is a big development potential on both plotted development and as well as apartments. But we chose to go ahead with the plotted development here. It's about 1 million square feet layout, about 48 acres of land. So the sales potential is likely to be in the range of 280 to 300 crores, and we hope to maybe complete this in next 12 months' time. So market is very, very attractive. Here, Golden Gate had borrowed with Indian Infoline, so it was struck, and we saw an opportunity. So we struck the deal with a commitment of 125 crores for the project.
Okay, so that is about the Golden Gate project. 250 to 300 crores is the realization that you said.
280 to 300.
280 to 300 crore rupees. How are you funding these acquisitions, Mr. Murli? Because I wanted to understand what kind of cash flows are you seeing? Will you take additional debt for this? And for the other purchase, Villas Realties, how much did you pay? What was the consideration there?
Well, as a principle, we don't want to borrow money and acquire new assets. It will be only through cash flows or equity. As a principle, Sriram Properties has shied away from using the debt capital for creating, long-term asset. We will not do it. Our net debt, as you know, that it's about 374 crores. We are on path to bring down to net debt zero in the next 12 to 18 months time. It is in line with our original thought process. It is exactly on schedule. On the new assets, we'll use the internal accruals or equity. This Golden Gate asset we have acquired through ASK platform, what we have set up 500 crore fund. Out of that, we have committed 125 crore for this Golden Gate asset. With the Suvilas asset, we use our own internal cash. Using that, we acquired the asset.
Okay, so you have plans to become net debt free. This is something you had indicated earlier and you're reiterating that. Could you tell us the kind of free cash flows you will be generating in the second half of this year as well as next year, which will help you repay the current debt of 374 crores?
Next to 18 months time, we are likely to generate somewhere between 350 to 400 crores of free cash flows from the projects. So that will help us to become net debt free. And as I said, we'll not be borrowing money for land acquisition. We'll be only using this either free cash which is available, profits which are available from the projects, or new equity which is available with the ASK platform. We'll use this money to acquire new assets.
So your overall cost of debt is at 12.5%. I wanted to understand what is the breakup like? How much is from banks? How much is from NBFCs? And will this come down? Of course, you're talking about net debt zero levels, but debt will still be there. So what kind of cost of funding are you anticipating?
Earlier, it was skewed towards more of NBFC. When I say NBFC, LIC housing is the major one. So I put that under NBFC category, which is what a higher rate of interest. But in the last 9 months' time, we have brought down the interest rate by more than 150 basis points. Already we brought it down. Now, from this current one, we expect in the next 6 to 9 months' time to bring it down at least by another 80 to 100 basis points. This last 9 months' time, these 150 basis points have come down, despite there is an incremental, despite there's an increase in the rate of interest. The overall rate of interest across the industry has gone up by more than 200 basis points. So we have brought down 150 from our original one. Essentially, we have brought down close to about 350 basis points, net on the debt rate of interest. We expect this to continue further because, again, all the NBFCs, we are closing down and we have moved towards banks now quite a lot. So I expect at least another 50 to 80 basis points to come down in the next 6 months' time.
Last question before we let you go. I just want to understand how are land prices moving right now? We are talking about the flats prices or the home prices going up. What is the contribution of land price hikes in this?
I don't expect land prices to move up in the near future. Again, consolidation is the answer. On the other hand, home prices are likely to move up, will continue to move up because the number of suppliers or the number of players in the market are very, very small. Each market, each city, not more than 8 to 10 people catering to 95% market share. Whereas on the land, not many NBFCs or banks or private equity investors or original landowners who want to dispose of the land, they got very, very few number of developers who can buy a really large fraction of land. Not many people are there to buy today. Hence, there is a, supply-demand mismatch is very, very high on the land transaction. On the other hand, home buyers, the supply and demand on the home sales, again, it's a very different opposite view. Hence, I don't expect the land price to move up at all in the next 12 months' time at least.
Okay.
Okay, we'll leave it at that. Thank you very much for joining in. That's Sriram Properties for you. Need to slip into a short break. Up next is our special segment, Midcap Spotlight. We'll be talking about Hindustan Foods. The stock is reacting to some news. It's up 2.5%, so stay tuned for that. Welcome back. You're tuned in to Midcap Radar on CNBC TV18. Let's get to our segment, Midcap Spotlight. Mangalam is joining in, and he's going to be talking about a stock which has rallied 1,000% in the last 5 years. Mangalam?
Well, that's true. Hindustan Foods is on the spotlight, and this is a company that actually needs to be spoken about at length to explain what they basically do. They've acquired Reckitt Benckiser's Healthcare India Khasra manufacturing facility for about 156 odd crores. But the core business of the company is basically to buy non-core manufacturing assets of large players. They manufacture products for large FMCG companies, the likes of HUL, some personal care and F&B products. They also manufacture products for Nykaa, Farex, Wheat, Hush Puppies, some footwear for Bata as well. They were established in 1988 by the Dempo Group through a JV with Glaxo India. But in 2013, the Dempo Group actually went ahead and sold their stake to Vanity Case Group. And since then, in 2013, they've only acquired manufacturing capabilities, non-core businesses of large FMCG companies. For instance, in FY17, they acquired a small leather division from Hindustan Unilever. In FY19, they started manufacturing detergent, tea and coffee. Also acquired malted beverages capacity in FY20, started home care production and color cosmetics in FY22, which aided them the business of Nykaa. And FY23, they started manufacturing sports shoes as well as ice creams. The stock has been rewarding the shareholders. In the last 1 year, it's up 83%. In the last 3 years, it's up 450%. And in the last 5 years, it's up a whopping 1,050 odd percent. And does it have numbers to match? Yes, in FY19, the revenues were close to around 492 crores. And in FY22, that number quadrupled to over 2,000 crores. In the first half of this year, they've done close to around 1,250 odd crores. Margins have been ranging between 6 to 7 odd percent. And this rise in revenue, because it's a manufacturing company, has been led by the rise in their gross block. So the gross block of the company now stands at around 708 odd crores. And the asset turnover of the company has been usually around 3.5 odd times. The debt on their books is around 400 odd crores. And the growth drivers for them is to continue to expand into new product segments, focus on scaling exports as well. They're integrating backwards with some oleochemicals, etc., which would aid their margins. And talking about margins, they're also entering higher margin businesses like private labels, as well as being the anchor tenant for most of the FMCG companies' manufacturing facilities. Do smart people own it? Yes, Westbridge has around 8.4% stake in the company. Sixth Sense India Opportunities Fund, which is managed by Nikhil Vora, has about 3.7%. And Nikhil Vora's family members in their personal capacity have 2.3% stake in the company as well. But in terms of valuations, extremely expensive, 8,200 crores in terms of market cap. Trailing 12 months net profit is close to around 58 odd crores. But even if you assume that, this profit doubles going forward, it's trading at 66 times. So strong company, good business model, but available at extremely high valuations.
Okay, that was a deep dive into this particular company. Mangalam, thank you so much for bringing that perspective. For the markets, well, there is some more selling pressure that we are seeing right now. 94 points down on the Nifty as we speak. Midcap index 2 is down 460 points at this point in time. And a couple of these stocks which are at the day's low, they include Sun Pharma, SBI Life, Cipla. So some selling pressure on these pharma names. We also have Divi's Labs, which is lower. DRL is the other one, which is lower in trade. So a sharp fall is what we are seeing in these pharma names as we speak. We'll do one thing. We will wrap on this edition of Midcap Radar, your stocks when we return, and we'll keep getting you all the market updates.